Thank you guys for showing up today. Good morning to everybody, and hope we get a lot of information out of this workshop today. I'd like to thank the Bluefield Economic Development Authority for hosting us and allowing us to put this workshop on for you guys. My name is Harold Patterson. I'm with the West Virginia Small Business Development Center. I'm the business coach in this area, and I try to help people with their business needs, whatever they want, whatever they need. I'll try to find them answers, whether it's a startup, an expansion, or any other type of question that you may have. And today we're trying to put on a workshop for independent contracting and give you some information on that. We find that this is probably one of the most misunderstood topics that we come across, and hopefully we can put some clarity to it today. Today we have Ms. Kimberly Donahue from the Small Business Administration, and she's going to lead this workshop. Kim, I'll turn it over to you.
Thank you so much, kind sir. My contact information is on the screen if you want to call me with any follow-up questions. Otherwise, let's get started. I should probably tell the story of why this topic became so critical to me. About 5 years ago, someone came to me and said, "Hey, I need a business license." And in West Virginia, it's at the state level. And I said, "Oh, you've left that job. That's cool. What are you going to do?" And he goes, "No. I've not left the job, but we're going to be 1099 employees from now on, so that we're going to have to handle our own unemployment tax, that sort of thing." And that took me aback because that's a no-no. And so I'm thinking there are a lot of other, as Harold said, a lot of other businesses out there who kind of get confused about this. So it seemed to make sense that, we just go ahead and address this because there's some different rules. Now, according to the Economic Policy Institute, there are a lot of employers, probably as much as 50%. No, excuse me, we don't know that, but there are a lot of employers who are deliberately misclassifying workers. And what that happens is that actually has economic costs because you're actually denying folks their benefits. That also results in big losses to Social Security and Medicare funds that you and I have to make up the difference for. And it's going to be a growing issue because, the gig economy is expanding 3 times faster than the regular. So by 2027, 50% of the workforce is going to be, gig workers, independent contractors. So today I thought we would get started by looking at statutory and non-statutory employees, and then go on to the 2 tests that are out there. The Internal Revenue test of who's an employee and who's an independent contractor, and the Department of Labor test. And then either if you have independent contractors and they're really independent contractors, or if you're an independent contractor yourself, we're going to have the documentation that independent contractors should have in place. To get started, though, there are technically 5 types of workers. There are statutory employees. That means the law says this group of people are going to always be employees. Then there's statutory non-employees, and there's only 3 categories of those, but we're going to get to that. There's also independent contractors, there are employees, and there are government workers. Generically, these are all identified as workers, but the phrase employee refers to something very specific. So statutory and non-statutory. Statutory employees, here's a good example. Drivers, now, who deliver beverages, meat, fruit, vegetables, baked products, or pick up laundry and dry cleaning. Beverages, though, doesn't include milk. It's a weird kind of thing, but by law, those drivers are always going to be employees. Life insurance agents who only work for one company are always going to be employees. Home workers. That is, you've probably seen when you ship goods to someone else and they put them together in their home and then they send them back to you. If the goods are then returned to that business and the business says this is how you do this, those are considered home workers, and those are always employees under the law. They've also included in here traveling sales, goods for merchandise that for resale, supplies for operation. What is the salesperson's business principal activity? There are three non-statutory employees, direct sellers. Think of the Avon lady. The Avon lady would be a direct seller because their payments are related to the sales, the output. And even if you have a written contract saying that they won't be employees, well, you should. You should have a written contract to say they're not employees. Real estate agents. Real estate agents are statutory non-employees, but basically because their payment is based on their sales output and not hours. But again, there should be a written contract in place saying that they're not employees, even though the law says statutorily these are non-employees. And then, of course, companion sitters. Now, I've got a link on here. So when you get the PDF, you're going to get IRS Publication 15A, and it's a employer supplemental tax guide. It's going to go over all of these and give you some examples as well. Now, when it comes to the IRS, they're going to look at two main factors. They're going to look for evidence of the degree of control you as the business owner has, as opposed to the independence, the level of independence of the independent contractor. Now, they've got this evidence into three basic categories: financial, behavioral, and the relationship. So when we're talking financial control, when we are talking behavioral control, how much control over the activities of the worker has the business owner reserved the right to direct? It doesn't matter if the business owner says, "Oh, I want, go do this, go do that," and does not direct or control. But if they reserve that right, that could be considered an employee situation. So for behavioral control, though, the IRS is going to look at the types of instructions given. They're going to look at the degree of instructions and how complicated are they and how detailed. Is there an evaluation system in place? Obviously, if there's an evaluation system in place, that tells you, normally that's an employee situation. And does the business provide training to their independent contractors? If they do, that would indicate again an employee relationship. Now, when it comes to financial control, if you're in business, this probably comes naturally to you. Do you, as an independent contractor, or does the business have the right to control the economic aspects of the worker's activity? Again, we're using that generic term worker. So does that independent contractor who's in business for themselves, have they made a significant investment in their business? Are there expenses that they have that are not reimbursed by the company? Does that independent contractor actually have an opportunity for profit or loss? Do they make those services available to other businesses? And is the payment method is usually going to be, it's not going to be hourly. It's going to be something else. But those are the factors they'll look at for financial control. Also, the type of relationship. How do they view that relationship between them? So, for example, is there a written contract? Are there employee type benefits provided? Is the relationship mostly permanent? Let's say you have an independent let's say you build houses and you've got a roofer working for you as an independent contractor. But if they're only working for you on your construction jobs, then that relationship is pretty darn permanent. And is what they do a key business activity for you? Again, if we think about independent contractors and roofing, can somebody build a house without a roof? Well, no. So those are the types of things that they're going to look at in terms of the actual relationship. Now, if you have a subchapter S corporation, and many of us do, officers are normally employees, but they're only normally employees because, if you're a small business, you're an officer. I'm the president or secretary, whatever. But I also work for the business. So in the normal flow of business for subchapter S corporations, for that us small businesses have, the officers are normally going to be employees. If you have officers that don't perform any services, or they're not entitled to any other compensation, whether direct or indirect, those folks are not going to be employees. So that's just a quick rule of thumb that you're going to see that you should keep in mind when it comes to the officers. I think most of us are going to be in situations where the officers are going to be employees, but if you come across this second circumstance, that should help. The second law that comes into place, and this is an old law. I can't remember if it's the 30s or the 40s, but the Fair Labor Standards Act. And the Fair Labor Standards Act, you may have heard of it before, but it establishes overtime pay, minimum wage, what kind of record keeping businesses have to do, all of that. And Fair Labor Standards Act is interpreted by the U.S. Department of Labor. They have created some new rules, and they're going to look at the totality of circumstances analysis. And this is going to be a bit of a different analysis. But it's not only based on the law, the Fair Labor Standards Act, when they created this new standard, but there has been interpretations of the Fair Labor Standards Act in the courts. And so those court decisions are now expressed in the new rules. Now, the best place to see those new rules are Fact Sheet 13. I've got the link here, and it actually gives you very, very firm examples. Going fairly quickly here. So when we talk about this, I mean, the overall reaching presentiment, is economic reality. So the type of worker is determined by, and it's going to parts of it are going to sound very much like the IRS test. Is that worker integral to the business? Is what they do key to the business activity? And if they went away, the business couldn't operate. Do the managerial skills affect the profit and loss? Now that, again, we saw that in the IRS. So does this independent contractor, do they have management skills that will lead them to either make a profit on their independent business, or can they make a loss? Investments. Now here we're talking investments of typically tools. If we go back to our roofing example, the investment might be, trucks, and all the tools that you would need and safety equipment, all of that. If that independent contractor has made those investments, then that would indicate that they really are an independent contractor. But if the worker has not made those investments and that instead comes from the business that they're working for, that again would indicate more of an employee relationship. Skills, the skills and the training that goes along with that, again, it's going to sound a lot like the IRS standard, but where do those skills come from, and who does the training? Because an independent contractor, they're responsible for their own training, etc. Permanency, again, much like the IRS, it's, how permanent is this relationship? How long has it been going on? And lastly, the level of control that the business will have over the work that is done. Now, I've used the example of construction workers. That's one of the trouble areas that we have. That's one of the trouble areas that we have difficulty with, and it's easy because even in the roofing situation, you could see it both ways. It's also difficult when it comes to franchisees. And Harold, I'm sure, is talked before about, how a franchise works. But, let's say the McDonald's you see out there, it's not owned by McDonald's. That is a franchisee. That's someone who has purchased a McDonald's franchise. So how does that situation work? And how do they relate back to corporate McDonald's and the workers that they use? It's also a trouble area when you've got volunteers. And I think that the law would want to express the fact that volunteers should be safe. But if they are paid volunteers, then they could technically have become employees and you not realized it. If you use trainees or students for free, or just a nominal fee, yeah, that's another trouble area. We're going to have to look. You're going to have to do a little more research. You're going to have to get into the details. And of course, we talked about home workers. Again, we had what did they used to call that? Back in, let's say, 1820s, 1830s, 1840s in England, you would have shirts that were produced, but they were actually, the pieces were produced, but the piecework, the sewing together, was done in folks' homes, mostly women, and those were considered home workers. And that's why, again, it's a difficult it is a trouble area, but also why they are considered, for their own protection, it's considered a statutory employee. There are some exemptions under the Fair Labor Standards Act, and I just decided that, we need to throw these in because, again, the Fair Labor Standards Act primarily deals with, I mean, it enforcing the minimum wage, providing for overtime pay, etc. So if we look for exemptions for both minimum wage and overtime, we're talking about, let's say, the kids who come in and work in those seasonal amusement parks. Maybe it's a small newspaper. A lot of the professionals, lawyers, for example, are not, they're exempt from minimum wage and overtime. Part-time farm workers and those sitting companions. Now, it's really interesting, though, that the next group is they are exempt from overtime, but not from the minimum wage. And it's really interesting. Domestic service and motion picture theaters. These get really, really specific. And where it kind of goes between both, it's going to be like hospitals and residential care. So for example, a lot of hospitals, their employees are not on, a standard 5-day work week. They may be on a 14-day work period. And so there's a little wiggle room for those types of companies. And that will include things like, organizations like fire, police, etc. This is probably my favorite part because came from a contracting background, and we do this right. And so we added this in here because I think it's important that that you have everything written down and documented. And so if somebody comes to audit you, whether it's the Federal Department of Labor, your State Department of Labor, or, the IRS, you've got the documentation to prove, here's why person is an independent contractor, and here's why, and oh, look at all this stuff I have. So as a business owner, you really need to get this right. I've had situations, and it's happened to me. It's happened to a friend of mine where had independent contractors, and they were really independent contractors, but did one thing, and according to the state Department of Labor, that made them employees, and he had to go back and pay all of that withholding, et cetera, even though they had already paid self-employment tax. And if you want to talk about that in a minute, we can get to that. Harold can help with that a lot. You are going to need a formal contract. You should have that signed by both parties. And this contract needs to detail the scope of work and what they call a changes clause. What happens when we have to make a change? Hey, they want a red roof instead of a black roof, and they want metal instead of asphalt. What about the delivery schedule and the deadlines? Again, that should go into that formal contract. Also, the amounts of money that the independent contractor is going to be paid and the timing of those payments. And who owns the work. So, for example, let's say that a law firm hires a new attorney, and when that attorney's work is presented, that law firm presents that as their own. So the law firm has ownership of the work, not the attorney who did the work. So again, that's probably a bad example in what we've been talking about, but who has ultimate ownership of that work? The independent contractor, the worker, or the business? And it should also lay out how and when the contract is terminated. You should also have very plain language in there. If you want to say this is an independent contractor and here's part of my proof that they're an independent contractor, you should also say in this formal contract that the contractor is not an employee, that there is going to be no withholding for federal tax purposes for Social Security and Medicare. The contractor pays their own expenses. The contractor is not eligible for benefits because they are not an employee. And the contractor must provide proof of their own liability insurance, and the contractor must provide proof of business registration. And a lot of states, including West Virginia, independent contractors are also required to have a contractor's license. And so you should have that in that formal contract as well. That must be an element in there. And instead of maybe having a lawyer do one of these every time you do, because that can get expensive, we suggest, take a boilerplate. If you want to make sure everything's, great and legal for where you live in West Virginia, then, have an attorney design one as your boilerplate, as your template, and then just you have the ability to fill in the blank when you use different independent contractors. One of the other things that you need to do for all your independent contractors is get the W-9. That's the request for taxpayer identification and certification. Again, this is an IRS form. You should get this W-9 form before anybody starts work, any independent contractor starts work. But this form will certify their taxpayer ID. And at the federal level, that's an employment, or that's an EIN, or they could be using their Social Security number. Typically, if they're a sole proprietorship, they're using the Social Security number. It also certifies, again, this is the worker certifying that they know that this work, the payments are not subject to withholding. And it certifies the exemption from some types of reporting employments. So again, request this before work ever starts. And then you're going to take this work and use it to create the 1099. It could be a 1099K, NEC. There's so many more of them than there used to be. It used to just be, to me, I only dealt with one. But there's different types depending on the type of worker or independent contractor that you're looking at, and the IRS has all of those. But you're going to use that information to do that 1099. And if you currently have independent contractors, you know that they will get this 1099, let's say, end of the by January 31st for the preceding year. How much did you pay them? It used to be that it had to be a lot of cash, and then it went to, it's going to be, you have to file this if it's 600 or more, but that has changed recently, so it is under that 600. So just do it. Even if it's like, even if you just pay somebody $20, do it. You'll be safer for doing that. Insurance, again, we talked about in the contract that they should have those. They should have their own general liability insurance. And if they have trucks, et cetera, they should have their own commercial auto insurance. They should definitely have their own workers' compensation, if they have employees. And you might want to have an umbrella policy. That's just for things that your general commercial liability may not cover. So, for example, we worked for a bigger company, and they required us to have an umbrella policy that went beyond, and so it was like an additional $2 million, and it didn't cost that much. Another thing that you should think about having is something called subcontractor default insurance. And I had not thought a lot about this. I'd not really heard about it, but it makes a lot of sense if you think about it. If you're using independent contractor and they're doing work for you and they fall down on the job, or they don't finish the work, or they do it very badly, you're in a bad place. And so the subcontractor default insurance can help you mitigate the situation when that happens. Also, we talked about in the contract, they should have all their business registrations, but state or city business license. In West Virginia, we have a state and city business license in the bigger cities. I think Bluefield has one. In states like Virginia, I believe the basic business registration is done in the county, but also any special licensing. So we talked about the contractor's license before, but if there are different types of federal business license if you're dealing with, alcohol, tobacco, and firearms. And if you're using like a professional, let's say you're hiring as an independent contractor, maybe that attorney to write that a boilerplate contract, that would be, you would want a copy of their professional licensing. When it comes to records retention, I think it's smart to just kind of think in terms of the IRS rules. So when it comes to a breach of contract, you've only got 10 years, okay, to sue for that. So you've got an independent contractor, they screw up, you discover it, then you've got 10 years to pursue that. After that, you're out of luck because the statute of limitations cuts in. So that means you need to keep those records at least 10 years, right? On the other side, when it comes to the IRS, there are different rules for different parts. So, for example, you should keep your W-2s for your employees, I think 4 years, anything to do with employees, your W-9s, et cetera. Here's the thing, though, to keep in mind. According to the IRS, if they want to come and audit you and propose that perhaps there's been a fraudulent tax filing, then you should have records from the beginning of your business. And that just because that's what that's what they want to look at. So even though there are limitations on, you have to keep this 7 years, you keep this 4 years, et cetera, if there is the possibility if they allege the possibility of that there's fraudulent behavior, maybe an employer using an independent contractor instead of an employee, then you are required to have all of those tax filings for all of those years. Now, you don't have to have these huge banker boxes full of paperwork. I do. My garage is full from 1995 to 2005, but you can also use an electronic storage system. Now, there are some rules to that, whether you're going to just scan everything as a PDF, etc., and then just load it on the cloud somewhere. Publication 583, it's one of the best publications. The IRS always tells you what's going on, but Publication 583 will give you chapter and verse on what is an appropriate electronic storage system that will suit their requirements. We did talk about those contracts. Those contracts, you should have originals, and you should keep those. You should keep those. I say pretty much forever, but I'm sure that someone else may advise you for 10 years, etc., because of the statute of breach of contract. And that's where 10 years comes in. But honestly, I think you should have originals of those contracts. Don't store those electronically, store a copy, but keep those originals and keep those for beyond the 10 years, because you never know what's going to happen, because you may have a situation, it's not a breach of contract situation. Maybe you need proof that to show the IRS something. So if you have that in your records, you're in good shape. But if you want to do an electronic storage system, that tells you how. Okay. Here to me are the key points. The first is you need to set out and you need to review these things. So, and you need to document this review, because they're going to ask for this. If Department of Labor, State Department of Labor, IRS, et cetera, if they come and want to audit you, they will want to see how you made your decision as to who was what workers were independent contractors and what workers were employees. So first, look at that list of who's considered by law to be an employee always, and who is never considered, or normally never considered. Then we look at the IRS standards. So behavioral control, financial control, and the nature of the relationship. Again, how much control are you going to have over that independent contractor? And does that contractor, are they integral to your business? Your business could not operate without them. And does the independent contractor, can they make a profit? Or can they lose? Can they lose their shirts? Do they have control over their profit and their losses? Look at the investment in the business, who's purchasing the equipment, who's supplying, safety equipment, tools, etc. The skill or initiative required. Is this something that is very specific? And you're not going to hire a plumber to lay concrete. So if this is a skill level that's required that only a person like that independent contractor can provide, then that would indicate that more independent contractor business relationship. And then again, just like the IRS, the relationship, how permanent is it? Is it, hey, I worked for them for 3 months last year and 2 months the year before that? Or is it, when we operated the 9 months, we only operated for the same business? And just like the IRS, who controls the relationship? And again, that fact sheet 13 that I've linked in there is a good way to look at all of those Fair Labor Standards Acts or Department of Labor standards. We're going to have for you too a lot of additional resources. So after we get to the questions page, and when you get the PDF, you're going to go past the questions page, and there you're going to have, I believe, 4 pages of just hyperlinks that will take you to places like Fact Sheet 13 and other places where you continue to do some research. And again, and let's go back to, if you determine after your review that you do have an independent contractor, you're going to need a contract laying out those things we talked about. You're going to need a W-9 that you've gotten before they start work. You're going to have their insurance. You're going to have copies of their business licensing, any special licensing that they're going to need, and you're going to need to keep all of those records. And again, we talked about at least 10 years, but perhaps longer. Okay. We have now gotten to where we can do some questions. I'm on a screen sharing, so I may, if you don't mind, I can stop sharing. And Harold, do you want to see if we have any questions?
Is there anything in the chat box?
No, sir, I didn't. There's nothing in the chat, but submit your questions. And let me type it in there too.
Do you guys have anything you want to ask?
On the part where we talk, where a contractor has to have all of their information with the W-9, and they have to have their own workers' comp. Now, if they, doesn't make they have employees.
Uh-huh.
Now, they have to provide a form or document showing that they're exempt from workers' comp because they're self-employed. Are you aware of that?
Kim, the question was, do they have to show proof that they are exempt from workers' comp if they are like the only employee of the company? The owner of the company, rather. You're muted.
The controls keep moving around. I would ask for some proof of that. It may not be, on a fancy form. It used to be you got that from the state when there was a workers' compensation division. Now it's just a kind of a standard insurance form, but some documentation that says, no, you are not required to have workers' compensation. One of the situations that we see is that, or I've seen before, and I've done this, is, your officers of the company, even though they work for the company, they may have a safer job. They may be in the office most of the time. If you're an officer and you are not in the every day in the regular work of the business, you can actually opt out of workers' compensation. So even though the company may be required to have it, some of the officers can be opted out, and it really saves them some money.
And workers' comp does send you a letter saying that you're exempt. They'll send you a letter.
That's our concern. We have not received that from our contractors who say they're the only one from their company.
Yes.
And our insurance bills our workers' comp when they do not provide that insurance or that documentation.
Did you hear that, Kim?
Muted.
No, I didn't
She
hear
said,
all of that.
she said that the contractors that she's hiring has not supplied the exemption from workers' comp to them, and their
Mhm.
insurance is billing for it because they're not
Yeah.
providing the information.
And that's better for you. I know it's costing you more money just because they've not got their ducks in a row, but that is the safest way to go forward for you. It doesn't seem fair, but that is safer for you. So I just require them to get it to you.
Could she contact workers' comp and ask for that information?
Well, there's not really a workers' compensation division anymore. Because that was during some administration during the state, that was all privatized and it became Brick Street. And then it became, I can't remember what it is now. And so if I want workers' compensation insurance, I can just go to an independent insurance agent and they can tell me, they can sell me a workers' compensation coverage. That's probably what you're doing. Yeah, it is. So that's what you have to do now. That's why that documentation of, that they're exempt is a little harder to get.
There's one on the chat.
Okay.
So there's a partnership and they're gonna be the owners and the only ones working. So they were just asking for input on what to do to that regard.
There's a partnership question out there. They're going to be the owners and the only employees. Is there anything that they need to do?
If they're going to be a true partnership, then the business will provide them a K-1, and they will attach that K-1, each individual, to their 1040. And that will then that will make the IRS happy. That will take care of that. If they're a partnership but they're declaring as a limited liability company, then they're each members, and then that works. That almost works the same way, because if let's say they were single member LLC, they would be taxed at the federal level as a sole proprietorship. Now, and when you're paying all of that, paying yourself, that's and you can talk more about this, is you're required to pay self-employment tax. Taxes are like prepaid. So you're going to have to prepay your general income tax as an independent contractor, plus the individual personal withholding, because you don't get out of paying into Medicare and Social Security just because you're an independent contractor. You still have to pay into that, but it's just called something different. It's called self-employment tax. And that's one of the things that you file quarterly.
So you do pay the employee portion and you pay the company portion of those taxes.
Yep.
The other question I would have, and this is a discussion between you and I, what are the advantages basically of partnership versus LLCs? Which would you recommend, and why?
LLC, always. There's two issues. One is there's like 5 issues that you can kind of balance what you're doing. When it comes to the LLC, it's liability protection. You are protecting your personal assets against business liabilities. In a partnership, you don't do that. You are on the hook for everything, you and your partners. Now, there's certain types of partnerships that, like limited partnerships, where you've got a general partner and other partners, they're technically partners, but they do less. That's a little more complicated. It does limit the liability somewhat, but if it were me, I would just go ahead and be a limited liability company. Now, an issue we did talk about is, what is the difference? Does it make a big difference if you're an LLC versus a subchapter S corporation? Now, that's interesting. If you're a subchapter S corporation, there is more formal paperwork that you have to do. You have to have an annual meeting. Even if it's just you, you have to have meetings. You have to have meetings with yourself. I know that sounds weird, but I've seen that. I've seen that required. I've seen that required at SBA. And so you have, all those additional formalities is what they call them, but annual meetings, a stockholders meeting, et cetera. You got to have all of those. But the good thing is, you can, under a subchapter S corporation, you can make yourself an employee, right? The good thing about that is that, as opposed to paying the self-employment tax yourself, the company's paying 50% of your income, or excuse me, employment taxes, and then you're only on the hook for 50%, the other 50%, as opposed to if you're off on your own as a sole proprietor or as a partner, you're going to pay 100% of it. But again, and for the company, again, that's one of those things that they get to deduct. So a subchapter S corporation does have some nice things about it, even though it's got a lot more formality. If you're a person who you can keep your records straight and you don't mind, having an annual meeting and arranging that and keeping proof of that, it's sort of the way to go. Most people I talk to, though, is just, it's not something that they want to do.
And I'll remind everybody, always file your annual report with the Secretary of State's office. We run into
Absolutely.
that.
They've actually gone through, the Secretary of State has, and they have thrown a lot of people off from like 2020, when we had a lot of companies that would that just stopped working for COVID, et cetera, or I've come across that have forgotten to file, and they've thrown them all off. And I talked to them the other day, and you're not allowed to revive that. You have to apply again and pay all of those fees again. It's like $125.
Right. Another question?
They state that it's a bit off subject, but is there anything we can file through the SBA to help for funding the business?
As far as funding is concerned with the SBA, you actually work through a bank. I'm sorry, Kim, I'm jumping on your toes there. You actually work through the bank, and you square the loan away through the bank first. And then when the bank's satisfied that everything looks good, they will then ask the SBA for a guarantee on the money. Usually it's a situation to where they're just not real comfortable with the collateral. It becomes a collateral issue. They still ask for all the collateral that they could possibly get, but they just don't feel like there's enough. So they ask the SBA to come in and guarantee the portions that is not there. Is that about right, Kim?
Probably, yeah, that's perfect. It's probably a good idea to say too, though, that typically lenders, if they're not dealing with SBA, if you've got $100,000 loan, they want $100,000 in collateral. Is that fair to say, Harold?
Usually it's 120,000 in collateral.
Whoa, you know what? Yes, because of discounting. I
Right.
forgot about discounting. Discounting is a kind of a formula they run it through. So, for example, if you've got real estate, typically they're looking what is the future value. And so on real estate, for example, if it's $100,000, they'll only give it a value of 80. That's considered the potential, future value. It kind of works better if you're talking buildings, and equipment that has wear and tear on it, et cetera. But yeah, always look for discounting.
Right. Does that answer the question?
No more chat
Hey,
yet.
Okay.
I know that SBA actually has a new working capital program coming. Well, I think it's already been introduced, but that may be something they're interested in if that's the kind of product they want.
They said yes and thank you.
Okay. Guys, we're here to help. Not only myself, I cover this area. I can work throughout the state. We have coaches all over. I'll be glad to refer you to anybody if you have further questions. But also, if you're in the Bluefield area, the Mercer County area, the Bluefield Economic Development Authority, Bluefield, West Virginia Economic Development Authority is a very good resource. They have a lot of different programs, everything from helping you get your business started to business planning to maybe a little bit of funding out there at the end. There's some programs that they have for facade grants and some technical assistance grants that Jim always seems to push. So if you have any questions, contact the Bluefield, West Virginia Economic Development Authority. Contact myself. I think the information is going to be sent out with this video, or you can contact Kim directly, and you have her contact information. You saw it earlier. Kim, do you have anything else?
Just that the next time we come together, we're going to be talking about funding, and it's going to be a lot of it's not going to be just the nuts and bolts of it. We're going to go into kind of a lot of detail, probably more detail than you want, but it will better answer questions like, hey, we only need $30,000, which is the best way to get that. So, I mean, my first response always is like a microloan. The only issue with Southern West Virginia, et cetera, there are not as many as we would hope that there would be micro lenders, which are community based. But I know Harold knows at least one, but there's no such thing as a quick 30,000. I will tell you that.
It is a
Would you-
process.
Yeah.
And what day is that going to be on, Kim?
25th, I believe. I'll make sure that that's included on the PDF that everyone receives.
25th of September from 11 to 1. It'll be a lunch and learn here at the facility. If you, and that's the Bluefield, West Virginia Economic Development Authority's Success Center. And if you want to attend, again, lunch will be provided that day. Anything else?
Yeah, just to say, don't pretend I'm not an accountant, I'm not a lawyer. So what this was intended to do is to give you the basics knowledge that you need. I like to say is to know when you need to hire an accountant or a lawyer. You should always have, an accountant, but, knowing these issues and this is day-to-day business stuff. This is stuff that you've got to know, or at least have an idea of. And then you have to know when you need to reach out for additional help. Now, the first place I go is Harold, people like Harold with the Small Business Development Center. Because they have a lot of these skill sets. They know this stuff, and it's a good idea to talk to them and even just talk to them about some ideas. If you're thinking about hiring employees, there's a list on this at the federal side, the Federal Department of Labor. There's like 14 different things you have to have when you actually hire an employee. We didn't go over those, but so reach out to folks like Harold first.
Okay.
Thank you.
If there's no other questions, I'll let you go for the rest of the day. Have a great day, and we hope to see you on the 25th. Thank you.
Thanks.
Bye.